Well, welcome everyone this week to the Gentian Biweekly Update. This is where we share a lot of things that are hot or the topics that are top of mind right now. One of the things we often do right away as well is we go big. But before that, this last week was my wife's birthday and Mother's Day, and I did a lot of yard work. I did a lot of stuff that was really hard work because she's an acts of service woman. So I took my desire to buy presents out of the way, threw it out, and I said, okay, we'll do acts of service for her. And that was just a ton of different things she had a list for. It was great. Spent a lot of time doing that, but it was funny. We were out in the yard for a little while, and while we were working out, we were pulling weeds, and it's pretty tedious as we're going through. And then she saw this little ant come by, and it picked up a leaf like 5 times the weight of itself. And she said, "Man, wouldn't it be great to be that strong? I wonder what it'd be like." And I said, and I said, "Well, boy, that's amazing." So I picked it up and said, "Look, I can do it as well." So she thought it was kind of funny. We pick up little things like that as well, but you sometimes see massive things done by certain people. So gratitude for me this week is gratitude for her birthday, for my mother. I'll read you at the very end a poem that I kind of wrote for mothers and one for my mother as well. And really wanted to just this week give you some of the things that are top of mind. But before we do that, it is Ken's birthday today, so we want to give some gratitude and shout out to Ken. He is out of the office today. He's having a great time with his family. His wife has some very cool things for him. So we're grateful for Ken and his being born today. And with that as well, I'll pass it over to Zach.
Thank you, Chris. A ton to be grateful for. I had the opportunity to learn and grow a strategic coach yesterday, and it started off with positive focus, and they wanted you to write down what you're grateful for over the last 3 months. And I was just over the last 2 weeks, and I had a full page. So I could go on probably for the full session. But really as well, a lot of birthdays here. As you have heard, happy belated to Deb, happy belated to Kristen. She had a birthday over the weekend as well, yeah. And Ken. And really, this last weekend was extremely special to spend that time with my mother as well. Happy belated Mother's Day to all of you mothers out there. And I really appreciate everything my mother has done and she continues to do.
Thank you very much. I appreciate that, Zach. So today, what's interesting is we go big. One thing that kind of reminds me of going big, and I was always taught this by my grandpa when I was little, and I kind of learned this: if you ever encounter a giant, make sure you use big words. So what's interesting about that, those are little things that your parents and grandparents tell you when you're young. It's kind of funny. You can use those on your grandkids as well and kids, which is quite fun. But the key is I use big words sometimes. I like to sound loquacious. I don't even know what they mean, but they sound good. Perfunctory. Just words that I read from people that are very smart and brilliant, and I can just copy them, so I'm more like a parrot. So it is kind of fun as we go through those as well. But this week, I wanted to say, we watched the Lord of the Rings trilogy, my wife and my family did. So we did watch it over 3 days. For some reason, during that super cold, sort of rainyish 49-degree spring we had 3 days, we in 2 days decided to start watching the very first one. And then we kind of bled into the second one, stayed up bleary-eyed till 1 a.m. and then watched the third one, just 1 hour, the last part on Mother's Day. What's interesting is it's about probably 8 hours, 9 to 10 hours of movie, but it's about the rise and fall of man. And there's a lot of correlations to what it is we do. If you look at, I think there's a little gentleman named Gollum, and it consumes this hobbit for the rest of his life, and he calls it precious. And everything he's all consumed by. And what reminds me often of is how we or some people really look at money or things on earth and how those become all consuming to really to the leaving of all else just for that single thing, and it's called precious. And I saw a lot of that. That's a human thing that we have, to be addicted to one single thing. So sometimes it's money, sometimes it's other things. And when markets go up and down, they'll follow them. But this Gollum, anywhere that went, he would jump out and find ways to get the precious back. And it was interesting to watch. But when you watch that trilogy, it was my daughter's first time watching it. We watched the behind the scenes. What was very interesting is it looked as if they're in the middle of these incredible mountains and an incredible fortress was there and all, but it was all an illusion. So essentially, the only thing they had done is for 8 months, they built a village on top of a little knoll in a valley that had these incredible mountains behind it. And they used it for 8 days of shooting. Then they showed us all the stuff they were doing. It looked like they're riding down the fields, and they were actually in a single spot with a camera that just had like one of those riding bulls like you see at a restaurant. And it's interesting. So you look at those illusions, and sometimes those illusions can occur in other things. So they do these things to make it look like there's a massive castle. They build it a quarter size, And then they use CGI, computer generated imaging, to do the rest. And it looks like there's 10,000 warriors when there's really just one line. So sometimes I'm going to say that's what television does. That's what news media does. There's one act, one thing that happens. And 50 years ago, you used to read about that one time in a newspaper or hear about it at the 5 o'clock news if you listen to it, right? But today, that one act is multiplied 1,000 times, just like computer generated imaging. It's multiplied to an amplitude which it just blows it out of proportion, right? So what's interesting, again, some of the things, and I'd like to talk about what it is top of the mind this week, but what happens, they tend to get one topic, and whenever on that topic, if there's nothing else, and if it's generating advertising and interest, they keep iterating and talking and talking and talking and talking and talking, and you're like, oh, until you're kind of sick of it. And it draws you into it. It makes it much, much more important in your mind than it really may be to your daily life. So just be careful of that. Take a moment, put it in perspective. That's one of the things that we do here as well. Before I start talking about these topics as well, I just wanted to go through this couple of stories. I'm going to pass it over to Ryan for housekeeping. He's into Ryan Carroll's great, a new member of our team. He's passed the Series 7. Congratulations. He's in the middle of studying for and setting up the test for the next series, which is 66, which is a great test as well. But Ryan, I'm going to pass it over to you for giving some of the announcements and housekeeping.
Thanks, Chris. I'm very excited to be part of the team now for a little over 4 months. So that's why I don't look familiar to any of you watching, but I do look forward to meeting all of you when the time comes, when we're able to. For housekeeping items today, May is a very busy month in Gentian. Chris and Ken just spent 2 days studying with Ed Slott. He's the foremost expert in retirement planning for tax law. So always exciting to hear what Chris and Ken come out with for gems from those kind of educational items. As Zach mentioned, he was just with Strategic Coach for a full day of education as well. So looking forward to the gems from that as well. This week, all of us on the team are attending the virtual Raymond James National Conference for Professional Development. So more education coming our way. We do have limited office hours Wednesday, May 19th for our in-house professional development day. And then next Friday, May 21st, Gentian is sponsoring the stage live at the public market for musical performance by Steffi Brill. Lots of awesome performances been on that stage this year, so looking forward to another one. Our next bi-weekly update is coming Wednesday, May 27th. And then, of course, Memorial Day coming up on May 31st. So our office will be closed on that Monday. Summer Forum, June 16th, we have scheduled that for. So make sure to watch your email inboxes for information coming about that as well. And as Chris already mentioned, today is Ken Flannery's birthday. So if you get the chance, please wish him a happy birthday. He knows we're all thinking about him and hope he's enjoying his day off as well. Chris?
Awesome. Thank you very much, Ryan. I totally appreciate that as well. And the birthdays for Kristen and Ken, 2 team members here last week, Friday, and then today. Really, really nice to have you both here. Thank you. And we express gratitude to both of you for being on our team and helping make our clients have a wonderful, wonderful experience. So thank you on that. So some of the top of the mind items this week, there's quite a few that might be coming to mind and maybe different for you. A lot of questions have come up around inflation and inflation talks. You can see that when it comes to maybe gas prices, but more importantly, and probably where it most hits home, is your home. When you look at it, inflation is really, if you're looking to do a repair, you're looking to do something. Some of the wood in the building we have here, I was told recently, is up 5 times from where we put it in just 2 years ago. And it's because of demand. Inflation as well, let me give you a little bit of idea. I'm very fortunate with Abundance 360 to be able to talk with Joy Town. She's the head of Senior Vice President of Press Relations, or let's call it of communication at Huawei. And I met her at that program. And we have like a monthly call where we talk for 30 minutes about what's going on. And I asked her this time about what's really happening with all the chips in China and the new relations between your company and Biden. Now, Huawei, if you don't know it, is the biggest electronics maker in the world. And it's in Shenzhen, China. She's based in Dallas, so we get to talk here, which is nice about some of the issues. And she had said there's 2 things. One, Chris, if you look at what chip demand normally is, it's a just-in-time delivery. They made it that because they don't want to have big inventories, overproduce or underproduce. But when you have just-in-time, and then you've got countries and companies trying to hoard and get chips because because they feel like there's going to be a lack of chips coming up. She said, liken it to the toilet paper idea as far as what happened in the early portion of COVID. They make it just in time. So when people stockpile it, it falls off the shelves and it can't be seen and it's scarce. That's exactly what's happening in chips right now. You've got a whole, I think it's Lexington, Kentucky. You can see a huge picture of all the Ford F-150 trucks that they've got. It's just miles and miles, it seems like, of them. And the only thing they don't have is the chips for the engine. So really interesting to look at now that we're computer-based. That's one of the issues you'll find. So inflation, maybe let's call that shortages, if you will, is what can occur. Now, all of this is based upon demand. Demand, when it's high, creates these shortages because we've got a just-in-time industry. Same thing is happening with wood for construction. And remember, just going back to Economics 101, when there's a supply that's fixed and demand goes way up, what happens to prices? They go up significantly as well. And you're seeing that to some point where people are looking right now at maybe not, they're looking at selling their homes. This is one idea I've heard. I wouldn't recommend it, but selling their homes, getting an apartment for 2 years, and then buying back into a housing market at that point in time. And my question right away is, well, I've seen these before. What if the housing market doesn't quote burst or the prices don't drop in the next 2 or 3 years? Are you okay living in that apartment for 5 or 6 years or more? So again, those are the kind of questions you have to ask in perspective. But across the board, those shortages, those prices, remember, inflation is something that's going to be based off of demand. So if we've got very high demand, prices will go up. It's not the worst thing in the world, if you will, but it does stink for those of us on a fixed income if we're not benefiting from those, rising demand. Now, our stock prices may go up, and they have gone up significantly. So you're going to find inflation is demand of the certain things that we need to buy on a day-to-day basis. So enough about inflation, but that's really been pervasive, and you've seen it. It's been happening for many of you. Excuse me, time frame for upgrades. If you don't say yes now, there's some builders that will not, or remodelers that will not be able to complete your project this year in the summer. So you're so much demand that it's so backlogged, you're finding that as well. Also, correction talks. We've seen a couple of corrections lately where the NASDAQ or the Dow has had a pretty significant correction. But Zach said this a couple times ago as well, and I refer to it as, now that the NASDAQ's at 13,000, remember the Dow was at 10,000, and people thought that was amazing. The NASDAQ is at 13,000 now. So a 1% move in the NASDAQ is 130 points. So when it's a 130-point day, people think, oh my gosh, or 200-point day, it's 1 or 2%. There's very few questions when it's up 1 or 200 points, but remember, the reducing, the downside, the correction always feels like 10 times more imminence, if you will, 10 times more weight than it does the upside as well. So just have that coming as well. And there's correction talks. Now, people often say to me, hey, Chris, there's going to be a correction, like they have some knowledge somebody else doesn't have. And my response has now become, yeah, you're right. Then they're stunned. Like, what do you mean you're right? You're right. There's going to be a correction. The only trouble is I know that we don't know when or how deep or how much. And then I stop because they obviously want to tell me when it's going to be, how it's going to be. But I say more importantly, if you look at what we've done over time and the perspective we've taught, what do all the corrections lead to? Opportunities to reinvest, for managers to buy, and to do conversions. There's a whole litany and list of things we have. And they lead historically in the last 100 years every single time to a higher market. So again, we see those are coming. There's various discussions on the virus, vaccinations, some normality returning as well. You've heard some of the CDC and some of the people talking about those as well. You can read all the information you want to about that and get as deep as you'd like. But I saw 3 fairly noteworthy people, and George Church and others as well, who was one of the guys who helped to develop the vaccine, saying things like, we need to start looking at demasking fairly soon and returning to normal life, with 60+ some percent of America having a shot in the arm, and another very large percentage that have had COVID as asymptomatic symptoms, I should say. So but you can go forward. There's going to be debate on this forever. And then the question is, when are you ready to go inside somewhere? This pandemic has shown people a lot of convenience. The convenience is Zoom. I love seeing you in person, really I do. What I found is a lot of you find, you know what, not having to go out in traffic, the half hour there, the half hour back, the fact that I can do this Zoom and then go out and walk or play golf or do whatever. A lot of you have been much more amenable to Zoom, and I don't want to do it forever with you and not see you again in person, but we're finding that more and more of you say, you know what, once a year is fine in person, but if I'm traveling to Florida, we can still do Zoom when I'm in Colonial Williamsburg, and when you come back, we can meet in person. So anyway, we're seeing some of those. And here at Gentian, just as an update as well, we're beginning to very slowly, we'll see 1 or 2 appointments per day, maybe 5 or 10 at very most per week. We're being very careful about bringing it back, but we'll be in the process of kind of up ramping that over the next 2, 3, 4, 5 weeks as well. And seeing that, especially as the weather's nice outside, we can have meetings outside as well. So we're definitely looking forward to seeing you back in person. It's definitely not full bore. So you're going to see some capacity constraints there, at least to begin with here. But if somebody really wants to meet, we're beginning to do those as well. There's also gas shortages, cryptocurrencies are discussions as well. I just want to let you know, we see all those. We just don't bring them up to you and talk too much about them unless you have specific questions, because again, we know it's important, and that is faith, patience, and discipline to stay on your plan. It's simple, but it's not easy. So as we're looking at the planet, or we're looking at the live it, or we're looking at the side of give it. Here's a fourth one I'm calling inherit it. We're seeing more and more of you inherit assets from parents as well. These are huge, huge, huge items. Some of you are becoming the executors of your parents' estate, and they're moving their assets to us to be able to have a closer view of them. That's been happening around as well. So we see a lot of these things as well. We're here to continue to look at that and give you perspective, offer you the service whenever we can on that. So feel free to reach out on those as well. But before I continue on with a couple other ideas, let me pass it over to Zach for some ideas on the market.
Thank you, Chris. We'll go through a market update and then a few items of note as well. And some of those being a certain asset class that over the last month has been a kind of a surprise at how well it's done. And then also just another reason to diversify, which we've seen over the last month or two as well. So starting out, the S&P 500 year to date is up 10.54%. The Dow Jones 11.97%. And the NASDAQ, which is about 49% technology, is up 2.32% so far. The Russell 2000 index, that tracks the small and mid cap size companies. And if you remember, over the last few months, we talked about how Q4 of 2020 was one of the best. It was the best performing month since 1984, since they started tracking it, and how that's continued into 2020. The Russell 2000 value portion of the index is up 23.64% on the year, and the Russell 2000 growth portion of the index is 0.78% positive on the year. So fairly large disparity between growth and value, and it was almost the other way for about 10 years. So we never know when that flip is going to happen, and that's why we don't try to assume or try to guess when it does. On the fixed income side of things, the current treasury yields, the 1 year 0.06%, the 5 year 0.15% yield, 10 year 0.77%, and the 30 year 2.28%. So by hearing those numbers, you can hear that it's very hard to find yield in the fixed income side of things right now. And something that we've been seeing lately is the emergence of a lot of fixed annuity ideas from people. And it could make sense for your situation depending on what you're looking to do and to try to get some yield, but just be careful on the time frame and what they're trying to promise if you're approached by them or you hear about those ideas, because oftentimes they lock you in for a set period of time that you may not want to be locked in at that rate depending on the time frame. The two learnings that we saw recently, the Russell mid-cap value. So that really is just strictly on the mid-cap side. For most of the year, we've been talking about the emergence of small cap value and how well that's really done, and mentioned that with the Russell 2000 index. But really, over the last 3 months, mid cap value, just in the last 3 months, 11.82% positive. And in the last month, where a lot of asset classes maybe haven't done as well, up 3.28%. And then the last piece of learning that we looked at is another great reason to diversify. What really pulled us out of the correction we had last March was technology, big cap technology specifically, right? What happened as the year went along, a lot of people flowed to that, oh, big cap technology or technology in general is doing really well. I want to put all my money there. I don't want to be as diversified. Now what we're seeing happening is a lot of money is flowing to small cap value, mid cap value. Oh, that's doing really well. And it really just emerges one of the biggest mistakes we can make as an investor, which is chasing what is doing well at the time and not remaining diversified. With that, I'll pass it back to you, Chris.
Awesome. Thank you very much, Zach. I appreciate that as well. I want to recognize a couple of gifts I received this week as well from Zach and his family. This is to add to my arsenal, but I received a wonderful book here. If you can read it, it's called Dad Jokes. As if I don't have enough dad jokes to be able to tell to you, I've got a whole arsenal more of them, and they are awesome. So we'll be using those on a pretty consistent basis as we go along. And the funny thing is since you can't remember them all, that's all right. I've got a folder here for them. It's great. That's one. Number two, I'm going to turn my screen here slightly to show you this one. But this comes from a great client of mine here. And if you can't see it, it's kind of difficult, but there's this wonderful, amazing machine here called ROK, the Rocker. And one of my clients, I saw this on his, this is from Dick Parker. It's a gift for me. And he makes these. And the cool thing is that as you do it, it's kind of an engineering marvel. And you can do this forever. Like, it fascinates me. You keep going here and it runs these little ball bearings up. It continues down. You're going to see here. And the cool thing is that I had to beat out, oops, that was me. I had to beat out his granddaughters because he makes these for them. And they say, Grandpa, what do you want to do with that? So he asked them, hey, could you give one of these to my financial advisor, Chris? And they said, no. So he made a third one for me. So I just want to do a quick shout out as well to that. There's many things that you guys sent and gave us, which we completely appreciate, but that will be here on our desk, probably entertaining me more than it should as we go along. So I appreciate both of those, and thank you for both gifts. So a couple things I want to do here too. We just sent out a Nick Murray Client's Corner, and it's really titled "The Terrible Temptation to Hold On to Cash." There's many, many lessons in it. Nick is phenomenal. You'll see a lot of the philosophy we share. But really, I think if you look at that, there's a basic human temptation to hold on to cash. And here's one thing as well. They say, and here's the idea behind it too. My brother-in-law is an idiot. This is what somebody says. It's like an idea. But he bought this and he's making a killing in it. You never know if that really happened or if it's true. But if they do it, they don't tell you about the 10 things they lost everything on before they make a killing in something else. So when you're looking at listening to other people doing so well in some crazy thing, be careful to listen to really, is that true or not? But you're going to notice several things in here. I think if you look at, there's 4 main points you're going to want to find, and that's called on the first and most important quality of the lastingly successful equity investor: humility. So you may have done very well over the past several years. We may have done very well. You may have, bought a stock or two. Humility is the answer. Don't start looking at it as brilliant. So as Zach said, we start doing something called lifeboat drills with everything going on. Lifeboat drills are when things have been going so well for 8 or 9 or 10 years, we prepare for when things inevitably get tough. This is where we start pulling maybe an extra year back of short-term bonds, not cash, but short-term bonds for income, preparing for anything that may occur where we may need to use that if we have a long, drug out 1 or 2 or 3 year bear market. Now, historically, in a secular bull, that's another big word for basic meaning long-term. Secular equals long-term. Secular bull market, corrections tend to be much quicker, swifter, and then they recover quicker. But when we're in the secular bear market, the long-term bear market, they tend to be 1 or 2 or 3 years. So you'll notice we might start to pull a few things back, but keep ourselves, again, predominantly stocks and equities for the long term. To remember your plan and continue to work it. Simple, right? But it's not easy. Also realize that to successfully execute your strategy, wait for significantly lower prices and buy them. You'll need to be right twice. A lot of people think that I'm going to hold on. So by not investing cash when you have it or holding a ton of it and not putting it into plan, you have to be right about now, not buying, and then you have to decide when to buy. If you sold it, you have to be right twice. It's when you sold and when you buy back in. And I have found over my career, I have not found many, if any, people ever to be successful in that. And it's been a pretty long career, 25 years. And the fourth is accept the historical odds of catching a significant decline in the next year are 3 to 1 against you. So historically, when you look at that, that's just typically what happens. So you may see a 20% correction after the market rises 50% from here. So it's a great piece. I think you'll see that coming. I just wanted to share that with you. It's a wonderful piece that you'll have as well as we go forward. I wanted to also share something with you. I'm going to share my screen here. So we get a bunch of great pieces. I'm going to probably start recording these 2-minute things as we go along, but I'm going to share my screen with you here real quick. And I'm going to go in and pull up this wonderful chart. This is called U.S. equity markets. And what it is U.S. equity markets performed well in the months before and after price increases. Another big thing people have been talking about is what happens if they raise capital gains tax. Oh my gosh, has this ever happened before? This has never happened. This is unprecedented. I hear this and I say, well, it's only unprecedented because you don't remember 1986 and 2012. Okay, we have short-term memories. I don't blame anyone. This is what we're here for. But if you actually look at two different times, when we had capital gains taxes increase in 1986, we had a fairly significant rise, up 46%, and also the Taxpayer Relief Act of 2012, which is odd that taxes went up during it, and this was up 23%. But if you look at these, you're going to find a significant increase. But look, right before both, you find there was actually a slight dip in the anticipation of them happening. So humans anticipate the worst, and then once it happens, we move on. So remember, a lot of times once people know something is imminent or believe something is imminent, the full reaction will be priced in. Once it happens, a lot of times, if this happens, it's going to drop then. People are past it, and they're moving forward. Anyway, this is a great slide from Invesco I wanted to share with you. And there's a couple other pieces I could share from Ed Slott. Actually, I'll do that quick. We spent the better part of 2 full days going through tax law, through different charts, through the Secure Act. There's basically about every 10 seconds, the tax law seems to be changing, right? But with the Secure Act and a lot of things that occurred with it, there's a big question on the 10-year rule. If the 10-year rule, when somebody passes away and leaves money to someone else, there was a 10-year period with which you have to take money out if you're a qualified beneficiary. And what happened is the IRS came back and said, but you need to take out distributions every single year. That is not how the world was operating. The world was operating on the fact that when you receive it, you've got 10 years to be able to take it out in the very 10th year, first year, so any year you want to, right? So there's no schedule. Then the Ed Slott went back and his whole team did and said they're absolutely wrong, and they showed them where this was. So the IRS is in the process of amending it. They don't come out and say, hey, we did this wrong. They're going to go, actually, this is what we meant by this interpretation. So that was a huge, huge part of it. But there was also a ton of other ideas. So when we look at the life expectancy tables are increasing next year to 2022, so they'll be longer. There's a couple of proposals right now to increase the age for required minimum distributions to 75, but they're probably going to temper around 73 or 74 for the first distributions. We'll keep you posted on those. A couple others, creditor protection for retirement accounts. We went over all the different ideas and charts with those. Company plan comparisons, what's going on with those, any changes in those as well. All of the changes in the 2020 CARE Act, which we sent this out to you a couple of times, but there's a couple of pieces we took a look at. 2021 health savings accounts. We went through the tax planning and looking at the brackets for the year as well. And just what does it mean? The trust taxes, the exemptions, what might those mean if they change? We also went through retirement contribution limits, went through Medicare income planning. These are just charts that we get to keep with us. IRMA taxes, Secure Act, all the different aspects that came from the Secure Act and paths that come from it. The surplus on 21 taxes when it comes to planning for capital gains and others as well. So a lot of different things that we went through here were incredible pieces. I just wanted to show you some of those. And that's not including the tax law, which is 181 pages on 2 different manuals. I think 161 in the Master Elite manual. We've been doing this for about 10 years. Is everything that we talk about important? No. Is the idea of what it is? Yes. If you have a tax question, I've got 3 experts that we can actually reach out to. They are actually tax law specialists, some of the best in the nation. And we've got them basically as a resource for us on retainer for you to be able to ask those questions. So oftentimes that's where we go. We have a question that's a little bit odd and a benefit. My dad passed away. It was an RMD, but it was between these 2 years and he didn't take it. What do we do? We'll bring that stuff up to you as well. So RMDs are back. That's one big portion. I'm going to simplify a whole bunch. Required minimum distributions are back. You have to take them. We've got those calculated. You have to take them before December 31st of this year. Last year there was relief, not this year. Qualified charitable distributions are still there as well. The 10-year rule I told you a little bit about, and the tax law, most likely if it changes, will not retro to the beginning of this year because of how far we're out. Now that is Ed Slott's opinion. That is not tax fact. He said they can do anything. They are the government. But he said usually when it's this late in the year, that won't happen. There's a ton more, but we'll use them specific to you. Not so much just to blather on about these items as well. Zach.
Real quick, Chris,
Yep.
regarding the 10-year rule, we recently came across a scenario where maybe a company or potentially another advisor isn't as up to date on the 10-year distribution rule. And one of our clients inherited a traditional IRA this year, and the company that they worked with required them to take out a declining balance every single year and said that they had no other choice. So it was extremely interesting to see how other people are viewing that, and just to be cautious about that, and let us know if that scenario applies and you have questions, just because it is extremely confusing. and other people, other companies have been viewing it a little bit differently. So just keep an eye out for that as well.
I appreciate that. Thank you tremendously. I appreciate that, Zach. So I'll end this one with reading a little bit. I've got a few other things I could talk about. That's arrows out. We'll talk about that next time, which is an outward mindset. But this one is about Mother's Day. There's so much in the last 2 weeks that have occurred that it's hard to put it all in just one 30-minute section. That's even without Ken's section. So you can see we're super excited here as well. But let me read this Mother's Day poem. This is a general poem. I wrote one that's also got my mother in it, but still, this is for Mom. As the petals begin to drift off into the wind, the smell of flowers fill the air. It's time again to honor the one who gave us life. You may know her or not. She may be your best friend. She may be old or young. Whoever she may be to you. Honor her, or honor to her on this day for her grace and understanding, her patience in teaching, her loving and nurturing, for her kind and fierce reprimand, her cheering and laughing, her celebrating and grieving, her praying and planning, and her praying and playing, her example and character, her commitment and selflessness, most of all, just for being her. Mr. Me, today I thank my mom for literally helping me become the person that I am today, for all the blessings you have given me, intended or not, for being the matriarch of our family, and a great example of strength and self-reliance for all girls and women. So that was my poem for, mine has a few more lines from my mother directly for her, but she did laugh at me because in it I said Kathy. She goes, "You don't call me Kathy, I'm Mom." So it was kind of funny. I was meaning to say her name in it, and she thought it was like, somebody else talking about it. It was quite funny, but I want to leave you with that piece there today. That was just a great, a bit of an homage, I should say, to my mother, if you will. But I want to make sure that here at Gentine Retirement, we're helping you plan it, live it, and give retirement. So as we look at, and now a fourth, which is inherit it, but the two first ones are the ones we focus on here. And a lot of you are getting to that stage of give it as well. But really want to thank you on behalf of the team here. Stay safe, stay positive this week, and be grateful.